What's up everyone, Tom here with another video. Today we'll be talking about the latest stock market news as well as what happened on gold and silver over the last 24 hours. We'll also be talking about our technical analysis levels for the SP500 and Nasdaq. These markets are sometimes overextended and gold and silver has just shown a lot of people for the first time what a blow off looks like. Let's talk about that and more. Stay tuned. So obviously the move on gold and silver over the last 24 hours is what a lot of people will be interested in talking about. It's created a lot of buzz and it shows you the volatility in the markets are still there right now. There's a few reasons why that happened. We'll talk about that soon. But I also want to talk about what happened on the SP 500 late into the close yesterday. So we saw another sell-off event of the big FANG stocks, Microsoft, Apple, Google, Facebook, and Amazon, possibly the most extended stocks in the market in terms of big capital size, were all down, while value banks continue to be the play this week, which we talked about in that Buffett video we did on the weekend. So what is this telling us? Well, there's a whole bunch of craziness going on in the market, and it's very clear to see why. A lot of money is being made, and a lot of money is being lost very quickly. Things like splitting stocks is now making 10% on a share. Apple obviously announced they were going to split the stocks the other day, and now Tesla has, and it went up 8.4% on this decision in aftermarket trading. Does this make sense? Well, let's look at it in this case. Tesla is traded by a lot of retail traders. A lot of them are younger, it is true, and of course a lot of them like to own one share. They may not be able to afford Tesla's current price, so will this create more activity in terms of trading? I think it could. However, these types of stock splits have always been the thing where it's like that, buy the rumor, buy, and then sell the fact. So when it comes in, it actually is just like kind of, oh, well, that's boring. It's split now. Move on with things. So to go up 8.4% in just one move, and then possibly even more like Apple did, just shows you that certain stocks like Amazon, Google, any of these ones over $1,000, if they made these moves, they could also benefit from these kind of big hype and anticipation ideas. So it's something to think about. And I think all investors on this channel will be thinking, yeah, that's not bad for me. I don't mind that. So that'd be all right if you hold those shares. Another thing, China is of course going to be discussing with America, and they're going to bring up WeChat and TikTok. I've been a big proponent of the idea of retaliation from China, and I think the only reason they haven't is they've got these trade talks, and they're going to try to use these trade talks in negotiations when it comes time. Now, both sides are saying everything's all good, but we very much know they're not. If they don't come to an agreement, or if the market doesn't like what they're doing, or even if they start fighting with each other, expect sell-offs in some of those FANG stocks because they are very susceptible, that we've talked about before, towards trade tensions. Let's have a look at Apple's extension right now and just talk about what happened. So here's Apple, and here's what happened during that kind of September trade tensions into January 19. A big sell-off. We went from $232 down to $144. A very large sell-off through those trade tensions. Now, another thing I want to just alert everybody to is that we had a big run up in 19, and we were very far away from one of our favorite moving averages, the 20 exponential moving average on the weekly here. Now, what does that mean for us technically? Well, when we move too far away from this, the market has overextended and moved too quickly. What are we seeing right now? The market moving too quickly. What did we know? There are a lot of retail traders buying Apple. We know that because we saw those Robinhood tracker stats, and we know that it's very, very popular. And of course, the split has created a lot of hype and anticipation. So are we seeing Apple move too fast, too quickly? I definitely do start to think so. And when we talk about gold, it will make more sense. So look here, this is the same 20 moving average, the red one here, and look how far and overextended gold was. So gold went 3 huge bullish weeks, moved incredibly quickly, followed by a cracker of a sell-off. And now we're recovering, which is to be expected. So what's just happened on gold? Well, I consider this a blow-off. So what does this mean? Well, a blow-off basically means that we've had a top, or at least a theoretical top for now in the market, and we've got that big sell-off followed by probably some form of pretty strong recovery, followed by another sell-off, and then it will stay in a very large distribution range. Now, why does this occur? Well, it moved too fast too quickly. Just like Apple, which could be doing the same thing, this has done that, and it just didn't make sense. And what do we know? Retail investors like you or myself were getting into gold hard. Now, I'm not saying gold can't get to $3,000 or $4,000 over the next 6 to 12 months or even multiple years. Gold may be in a very bullish long-term cycle. However, the move above 2,000, that key psychological, always leads usually to some form of blow-off. And that just happened on things like Bitcoin when it moved there too quickly, and possible Apple when it moved above $400 too quickly. So here we're going with what's happened to gold, and I'll draw a Fibonacci for everybody now just to discuss the idea of a blow-off and what that means for the market. So generally with a blow-off, what happens is that the market goes down very quickly. It usually goes down hundreds of dollars like it did here, so multiple percentage, and usually it's around 15% in terms of the move. Usually 15 to 20% total move from the top down. That's what you generally do expect from a market like this. Now, of course, this market's moved a little bit less than that so far. It's gone about 2070 down to 1860, but that doesn't change that this is a very huge move. Where will it pull up to? Well, usually these blow-offs go up to like a 61.8 fib, between the 61.8 and the 78.6 fib, and then they start to sell off. They go back down to the base, they find support, and they start trading in a very large range that starts petering out. It can become good trading environment, but it's very difficult to trade it here unless you're just buying the dip, you have strong psychology, and you want to hold it for the long term. Then it presents opportunity. But if you're wanting to trade this, it's going to be wild, potentially now for a couple of weeks. We're going to see big moves each way. So gold found that 50 moving average. It's found support there, but there's no real physical support until 1800 in terms of previous resistances. And then of course down here at the 1750. Now, one thing I mentioned on the weekend was I was talking about how this 1980 should have been strong resistance. And I want to clarify a few things. It should have been strong resistance. This was a key level. The problem is the gold came in very strongly off series of different things. We had bond notes coming in, but on top of that, we also had an aggressive sell-off that became so aggressive coming into this zone that you couldn't really just straight buy it at this zone here. What you needed to see was a change of trend on the smaller time frames. So you wanted to see it come down, find support, come back up, and then do that lightning bolt effect bullish momentum. Now, it may look like you're always missing out in terms of opportunities here or the best price. This is what saves you in these particular aggressive sell-off momentum areas. So waiting for that kind of big bullish movement is what's key. And the only reason I say that is because the move into this zone was very, very big. And then, of course, after it got through this zone, it just fell off a cliff. And that's also a direct reflection of the fact that this was such a clear resistance that when it got through here, it had to go all the way down to find the next kind of any kind of support, which turned out to be that 4-hour 200 SMA. What is one of the things that drove gold down so hard? Well, one of them was these 10-year treasury yields popping back up above 0.6% and becoming more attractive. These are the biggest daily jumps in 2 months. And this comes off the back of a very strong day of selling by the US Treasury Department. They sold $48 billion of 3-year notes on Tuesday afternoon to strong demand after yields rose just enough to attract the bargain hunting bond buyers. And I know you'll think, who wants these bonds at 0.6%? It's terrible. But, there is demand for them because everybody in the professional world generally requires diversified investments. And of course, bonds is one of the ways to do that. So all of these things kind of led into the gold demise, but really it's also just because it's an overextension. So what about silver? Very similar to, of course, what we saw on gold. Incredibly far away from that 20 moving average, incredibly high move. We went all the way really from that kind of $19, $20 all the way up to almost $30 in a matter of weeks. And this one here has the more extreme probably blow off as a percentage. We had a double top on the 4-hour that signaled it. It signals usually the end of trends. So the top is in for silver for now and expect a very similar kind of movement than gold. So what does this mean for the stock market? Well, it means that things like the US 100 start to come into question. How far are we away from the weekly 20 moving average? Have we touched it in a while? So you pretty much during this entire bull run of the crash into where we are now, it hasn't touched the 20 moving average. It obviously went through it, kind of almost touched it, and then moved up. But this has been a pretty parabolic move up. It doesn't take a rocket scientist to see that when we check out that monthly, look at these candles, incredibly bullish candles. We have not seen bullish candles like this since really the tech boom into the tech bust. Incredibly fast moves with a huge amount of retail traders like you or myself in the markets. So at some point, it will need to touch this 20 moving average. Will that be happening soon? We don't know that. We know that the US 100 has started to weaken ahead of trade concerns. That being said, Wall Street will use whatever excuse they feel like. They used obviously the bond excuse into gold. You can talk about whether that's relevant or not. People knew those things were happening though ahead of time. It just became the catalyst. So the Nasdaq's incredibly high and it's right at that kind of support right now where it's ahead of the channel that we've spoken about. And if it doesn't hold here, it starts to sell off down into the 10.5, find support there, and then of course it can be at 10,000 incredibly quickly. So it's possible that the Nasdaq could have a 10% sell-off on it potentially quite quickly, and that's just because Wall Street wants it and the markets need to go back to some kind of equilibrium. What about the S&P 500? A very similar story. We're super far away from the 20 moving average. I want to just quickly point this out. When we were in a very big bull run, multi-year bull run from 16 into 17 into 18, the markets sometimes extended past the 20 and it sometimes didn't. So it was always higher, but then would always come back down and touch it. Notice when it went a bit parabolic, as in there were bigger candles followed by each other, massive blow off, followed by pullback, 76 kind of 8, 61.8 here, followed by a test of the bottom, consolidation onto the next phase. So this is what happens in the market. When it goes too fast, too quick, it pulls back when you least expect it. And unfortunately, we could be getting that situation very soon, as I think these markets are starting to become extended and the S&P 500 got very, very close to making an all-time high this week. So hopefully this video helps everybody. If it did, of course, make sure you give it a subscribe and of course, like the video. And I just want to give a quick shout out to the trading community. You guys have been awesome and I really appreciate each and every one of you's support of this channel. We'll see you in another video. And of course, I'll be doing more live streaming, usually every Monday. And I hope to do non-farm payrolls every month as well, if you're enjoying it. So check out those scheduled streams. Have a great trading week, everyone. Stay safe and good luck.